Hello friends, in this video we are going to talk about blue chip stocks. Now blue chip stocks are your best bet for long-term investing, especially if you are not that very high on the risk-taking front, and hence it's important that you are okay with 10-12% kind of returns or 15% kind of returns, but you cannot see your capital overnight becoming half, like something which would have done in a rain industry or a HEG or a graphite. You want more stable bets and you're happy with the low returns. In that case, blue chip stocks are your best bet as a small investor, as a retail investor who has just started in the stock market, who is not a pro. This will be, and let's understand what is a blue chip stock. These stocks are basically having capabilities to endure tough conditions. They are high cost stocks, they've got good reputation, and they are often market leaders in their respective industry. So that is very important. Blue chip, the word blue chip indicates what? They are shares of very large recognized companies: Tata Steel, ITC, Hindustan Unilever, Larsen Tobro, Maruti Industries. What does this name inspire? A lot of confidence, because these companies typically have been around here for decades now, and you know that overnight they are not going to disappear. So they are very large and well recognized companies and a very strong history of financial performance, and they have endured tough market conditions. It's not that there's been one Lehman Brothers and all these companies have been out of the market. No, so Lehman Brothers would have collapsed a Unitech, a Reliance Communication in a long term, but then these companies have still continued to perform, and obviously they will cost very high, so they will, good reputation will come at a premium because they are market leaders in their respective industry. So why is the name blue chip so called? Probably it's because of the colored chips that you are used in the game of poker, because when you play poker in home, white chip is $1, red chip is $5, and blue chip is $10. That means whatever is the most valued thing, that's called blue chip. The most valued stocks which are trading in the stock market, just like blue chips in poker, which are $10. Or there is another theory to say that Oliver worked at Dow Jones and he coined the term blue chip in 1923, because when he used to stand near the stock ticker, he said that number of stocks are trading at 200 or more dollars per share. So he told them that yes, this is the blue chip stock, and the rest they say is history. Blue chip stocks have continued to create a niche for themselves in the market. So basically, what is a blue chip stock? It's a fundamentally a very strong stock. So can you really doubt the credentials of a Larsen Tobro, HDFC Bank, Reliance Industries in India? No. And they are always in high demand, because even if you look at their average trading volumes, that is the number of people who have bought and sold the stock in a particular day, you will see that they are massive stocks. Everyone in the market basically give attention to these stocks, and so you can have probably, let's say, Nifty 50 stocks, or you can have Nifty Next 50 stocks, which are fundamentally very strong. I'm again and again repeating that blue chip, for me the most important thing is that these stocks would have been fundamentally so strong. So for example, Hindustan Unilever has seen so many cycles of ups and downs in rural demand, going up and down. And in fact, Patanjali came and everyone said that, boss, Hindustan Lever is now over. Patanjali is going to take over the entire FMCG industry. Nestle, one Maggie incident happened. People thought that Nestle is over, but look at the way in these stocks have really come back. So these stocks, number one, what are the typical traits? They operate in a specific sector, as you would call it as niche. For example, ITC would have a diversified portfolio, but tobacco business forms its core in terms of profitability. L&T will have a lot of things. For example, it has got an IT business as well, but then its core is that EPC, engineering, procurement, construction business. Maruti would have an auto as its core. So in terms of market share, they are leaders. So for example, there are 90 companies in India, including auto ancillaries. They have generated a total sales of 3.96 lakhs crores in FY18. And if you look at the sector leaders, Maruti Suzuki, Tata Motors and Mahindra, overall in totality, these three stocks themselves command 45% of the total sales for the sector. So out of 3,96,000 crores, I have 45% of the market concentrated in these three stocks. So obviously, if you were to invest in the auto sector of India, these names have to pop up in your mind: Maruti, Tata Motors, and but then the challenge becomes that in terms of market share, Maruti, Tata Motors, and NMM were the Mahindra and Mahindra were the main contenders. But in terms of market valuation, Tata Motors comes down way significantly lower. Why? Because there are other aspects. For example, that it has got very high debt on its balance sheet. If a company has got very high debt on the balance sheet, what will happen is that it becomes very risky, right? Market conditions are adverse. So one company which is totally does not have to pay any loans in the market vis-a-vis a company which has got to pay interest and loans, obviously the second company becomes more risky. And then Europe conditions for Jaguar, Land Rover, etc. So you see that in terms of market capitalization, while Maruti and NMM remain in 1 and 2, Tata Motors slips to 8. And in between you have Bajaj Auto, Eicher Motors, Hero MotoCorp. Now, Eicher Motors has its own story now that HDFC has stopped financing their dealers and the stock is now nose diving towards the 10,000 mark from the highs of 32,000. So there will be, stories here. And then it has got a strong balance sheet. A blue chip stock will always have a good current assets to current liabilities ratio, at least 1. Total assets to total debt, at least 4. Basic rules of thumb. So if you go through their balance sheet, you'll see that their total debt to equity will not be more than 2 times. So for 1 rupees of equity, they can have 2 rupees of debt. That is fine. So that's a strong balance sheet. So look at the 3 things. One is market capitalization, concentration in terms of market share, and then strong balance sheet, high profitability. So why? Because these people have got competitive advantage. In India, if you really want to eat Maggie, I mean, in fact, noodles is synonymous with Maggie. So you can imagine the kind of competitive advantage that they have in the market. So definitely they will have a very high profitability, these blue chip stocks. So how do you identify a highly profitable stock? You just look at their return on capital employed, ROCE it is called. That if I have invested 100 rupees in the business, am I generating 25 rupees as return on capital employed? Because that is a very good indicator that yes, is the business profitable? And obviously if I have got a mind-boggling share of the market, my product has got clear brand value, and I have got great execution skills like an Infosys, an HDFC Bank, obviously my profits are going to be very good. And then I will also pay dividends. So for people who are looking at retirement planning, they become very good stocks because consistently they will give dividends. So there is something called dividend yield. So that might be low for these companies because their market price is very high, but then these companies, they've got very confident about their future, so they will continuously pay dividends. So you can just buy these stocks and forget forever. Every year you're going to generate a lot of dividends, so high dividend payouts. And then future price growth, predictability of blue chip stocks are high because they are dominant in the market. They've got an economic moat, a competitive advantage. Now, can you really recreate a Larsen and Toubro kind of a company instantly? Or can you really establish the Reliance Industries kind of the refinery? Very difficult. So something called economic moat, competitive advantage. In ITC, companies have come and gone, but the tobacco business, you really cannot. A Godrej Philip or a VST Industries cannot do anything about them. So that is the price stability. If the markets are going to fall, they will fall also slow. And once the markets start rising, they will quickly rise. So that is the advantage. You will not lose sleep over your blue chip stocks in terms of the portfolio. So that's the beautiful advantage here, that it becomes a safe bet. You know that I tell people that if I have got Nestle or Hindustan Unilever, I will not have to really crib even if the prices fall down, because I know that the next moment the prices increase. For example, FIIs today are selling because of the increased tax rates for trust and individuals. But then the moment the government is now willing to listen to them and maybe they remove the tax, the markets will rise. And the first people to rise will be the blue chip stocks. But then one caveat here, that once a blue chip, always a blue chip, is a wrong assumption, because you've seen Reliance Communication from a high of 900 rupees, now it is 2 rupees. DLF still continues to survive. Kodak, Eastman is now over. Lehman Brothers is now over. Nokia continues to survive in a very small format. So once these people were also monopolists in India or in the world, phenomenal economic mode. But then today, most of them are dead except Nokia, which has now become taken over by Microsoft, and DLF still surviving. So that's one thing you have to remember. Now, how would you invest in a mutual fund route in blue chip stocks? There are a lot of good mutual funds. For example, ICICI Blue Chip Fund, Franklin Blue Chip Fund, SBI Blue Chip Fund, Mirai Equity Fund, Aditya Birla Sun Life Focused Equity Fund. So you can start an SIP in them. But why not start a direct stock SIP? So blue chip stocks, you know that I am going to get good returns, generate periodic income. So good retirement saving options these stocks are, because they are highly valued, supreme long-term investments. They will continue to give me dividends. So I, as a retired person, will every year will continue to receive dividends from Unilever, from ITC, right? So then the challenge there will be that if I don't have a Demat account, I should open a Demat account and every month in a disciplined manner continue to accumulate 10 Larsen to Bro, 50 State Bank of India, 50 ITC. So I've given you a link in the description also. So you have to incur just 300 rupees for opening the Demat account with Zerodha as the offer that they have given for this channel viewers, and 31,500 rupees worth of technical material will be given to you free of cost. So that is what you can do. So the proof of the pudding lies in the eating. So let's look at that. What are these kind of stocks? So the idea is that blue chip stocks, the famous Hindi saying says that हाथी है, अगर हाथी जिंदा तो लाख रुपए का मत बिकता है और अगर मर जाता है तो 1.25 लाख होता है. So these stocks are something like that. They are like bellwethers in the stock market, a Unilever, a Nestle, HDFC, Reliance, ITC. And look at the returns. If I had started an SIP of 10,000 rupees with a monthly frequency for 5 years in Reliance Industries, my investment, I would have invested 6 lakh rupees, 10,000 into 60. Today, that money would have been worth 11.43 lakhs. That is a 26.55% gain. If I would have started an SIP of 10,000 rupees with a monthly frequency in HDFC Bank Limited, my 6 lakh rupees would have been worth 9.99 lakhs, almost 10 lakh rupees, 21% return. If I had started an SIP of 10,000 rupees in HUL, my investments would have been worth 9.97, again 20.91% return. Nestle India, 19.58% return. TCS, 16.87% return. Infosys, 14.14% returns. And then SBI again, which has been an underperforming stock for long. Still, if you would have to consistently in a disciplined manner, you would have invested in SBI, your money would have been worth 6 lakh rupees would have turned to 7.72 lakhs. So because the returns is calculated, it is 10.5%. L&T would have been returned 9.35%. Here, ITC is a laggard because it is just 2.84%, because there have been fundamental reasons. God knows why the stock is not rising, but in the next league, whenever it rises, it will instantly move from this 270, 280 levels to 400 rupees. So that's, my friend, the reason why I would really advocate opening a Demat account and starting SIP. If you're not comfortable with stock SIP, you should go for the mutual funds in this segment, these various kind of mutual funds. But then do remember that SIP is your best bet for long-term investing. Thank you so much for watching this video. I'm sure you would have liked it. Now, if you have liked it, don't just walk away. Let me know what are your observations on these stocks. What has been your investment results in the stock market? And it's going to be good, right? Thank you so much. Bye-bye.